today's video, we're going to give you a market update for the Phoenix condo market. Stick around to the end of the video to see what the list price to sales price ratio is in the current market conditions. So let's dig right into the information today. Comment down below if you think the market's going to crash or if you think the market is strong or weak. With all the economic data out there leading towards the weaker side, you would think the market is slowing down. Interest rates have fluctuated and are probably going to start trending down for the rest of the year. They're going to stay around here a little bit, but they're definitely going to trend down longer term. Right now, we're seeing most of the sales happen with a rate buy down, where the sellers are helping the buyers buy down their interest rate, at least for the first couple years. Let's dig into the data. So the Cromford Market Index is something that we use. They take all the data that we have in the MLS, which is our multiple listing service. They evaluate it. They create a number of charts. Now, this isn't broken down by condo versus single family home. This is all the market, but it's done by the city of Phoenix. And right now, understanding this charting, 100 is basically zero, meaning it's a balance between a buyer's and a seller's market. Anything in the green means the sellers have the advantage. Anything in the red, the buyers have an advantage. And what determines that? Supply and demand. You can see that demand is below normal, below 100, but supply is even lower. So whenever you have lower supply than you do demand, you're going to have a seller's market. When you have the opposite, you're going to have a buyer's market. And we could just click on another city just to see the difference. So here's Maricopa, and you can see the difference. They're in a buyer's market right now, where buyers have more control in the transaction than they do the sellers. And again, look at their supply is much higher and the demand is much lower. And part of that is because of the new construction that's going on in the area versus Phoenix, that you have a lot of established resale properties. So right now, currently in the Phoenix condo market, you have 230 units that are for sale. This first one is a co-op. That's a little different. You have to pay cash for that. But from $85,000 and on the higher side, we have just under $3 million for a unit built in 2008, a 3-bed, 3-bath condo, 3,900 square feet. Under contract, so we always want to look at what's under contract versus what's for sale. The reason being, we can see if the market is getting stronger or weaker. If we look at closed sales, which we're going to look at right now, we're going to see that there's less closed sales last month than there was pending this month, meaning this month has grown in strength. So if we look at what's closed, there was 131 had recently closed. Now, again, that's going back in the past. So if we look at what's pending right now at 171, we can see that the market is actually stronger right now than it was last month. Those are key indicators to look at. You always want to see what the active inventory is versus the pending versus what's closed. And the things that are pending are the most recent information versus closed. And a lot of people that collect data, they're always looking at the closed data, but the closed data is expired data or older data. So right now in the greater Phoenix area for condos, I can go through all the different cities and zip codes, but in general, in the condo market, the asking price average per square foot is $279,000, and the sold price per square foot is $273,000. And again, that varies city by city. So this is just the Phoenix market. We can see the flow of the charting and where we're at. We're right up in here, which was March of 2022. Homes were selling for more than list price back, and that's when the market peaked according to this chart. And then it hit bottom right here in January. And a lot of this whole line right here, this deceleration in the market, what happened then? Interest rates went up. And when interest rates went up, the real estate market went down. Once people got comfortable with the idea that the world's not crashing, and they look back 10 years ago and they see that rates have varied, and they understand the mortgage market, meaning that lenders are offering programs where people can still afford to buy a home, most likely with seller participation. So the sellers are participating most of the time. So what's not reflected in our list price to sale price data right here is the fact that sellers are, for the most part, contributing up to even $30,000 to buy down the rates for people buying their homes. And that is not always reflected in the sales price. In other words, that's what's keeping some of the sales price up. Would you rather buy a home and have the sales price higher and have them help you buy down your rate for a 30-year mortgage? Or would you rather have them lower the sales price and pay a higher mortgage rate? It just depends on the scenario and what the sellers are willing to do to help you. We're in the process of building out a really good website right now. We'll have that up and running in the next probably week or two. And also, we'd love for you to subscribe to the channel, share the channel information with other people, comment down below if there's anything else you would like to provide. If you know anything about the real estate market that we don't know, we'd love for you to share that with the group. Thanks for tuning in. Have a great day.